Welcome back, guys, to another video on the Canadian Real Estate channel. My name is Zack Brittain. This is my partner in crime, Matt Phipps, and we're here to talk to you about real estate in Waterloo Region. We are local agents and investors in real estate here in Waterloo Region. And in our last video, we talked about Burring multi-units and how we were in 7 units in downtown Kitchener for only $100,000. Today, though, Matt, we're going to be talking about how you can start and build a real estate portfolio right here in Waterloo Region.
Yeah, we're going to touch on two kind of key areas today. First, we're going to talk about if you own zero real estate at this time, how to get started, and then how to turn that into 1, 2, and 3 properties. And then secondly, we're going to talk about you already own your primary residence, you've built up all of this equity. Now, how do you leverage that into building a real estate investment portfolio?
Absolutely. So this video is going to be perfect. If you have no experience and you're considering getting your first property, you got that investor mindset, you're in the right place. If you already have a property, you're wondering how to leverage that into more and growing your real estate portfolio, then that is for you as well. So let's get into it. So guys, the very first scenario is for somebody that has never purchased a property at all. You're a first-time buyer and you got that investor mindset. You want to figure out how to get into real estate and you're thinking about the money side of it as well. That's awesome. The very first thing you should do is you should go to phippsbrittain.com and you should download the free buyer guide. There's a link in the description. It'll go through the entire buying process from beginning to end, covering all the basics so you know exactly what you're getting yourself into. Afterwards, you can get in touch with me and Matt and we can do a sit down to go through it in detail and make sure you're pointed in the right direction. Now that you've done that though, the very first thing afterwards is going to be financing, Matt. What are we doing for financing?
Yeah, you need to get in touch with the qualified mortgage broker or the bank. Yeah. Make sure they're good. You need to figure out your financing options. That's really the first major step. Once we figure out your capabilities financially, then we can actually put a game plan in place to get you to that end goal.
Absolutely. And one comment that we've getting a lot lately is, maybe, hey, Matt, Zach, I don't have 300, 400 grand cash and I'm not making 400 grand a year. So how am I going to get a mortgage? The reality is, Matt, there's always options.
There's always options, guys. There are creative ways to do this. It can be done.
It can be done.
Contact us and we can walk you through exactly how we've done stuff with our clients in the past.
Yep.
There's always a way.
Always a way.
Yeah.
Always a way. So now let's get into the 3 most common options that we think are the best fit for that first property. The very first option, really, really common. Matt actually did this himself.
Yep.
Hiya. We're doing a house hack, baby.
Yeah.
So what are we doing for that?
A house hack. Okay, so what we're going to look for is, this is just kind of getting creative with it. You can buy a house, rent it to your friends. Can't buy a house on your own, call a friend, get someone in there to help you. Yep. Basically just get you into the market and start trying to live for cheaper. If you can do that by adding value along the way as well, it's a great way to kind of use it as a stepping stone.
Yeah. Best case scenario, you can purchase it detached on your own. You can't get the financing for whatever reason, ask a friend, get a co-signer. The goal for this is to rent out a couple rooms, maybe to some of your friends, people you're going to school with, help you carry the mortgage and live for cheap. While you're doing that, you can also start updating the property and lift the value, coat of paint, some new doors, some new lights, new fixtures, or as you accumulate and some more savings because you're living on the cheap, because you're renting out rooms to your friends, you reinvest that cash for contractors to come in and improve the value of the property. We're living on the cheap and we're raising the value of the home on a house hack. It's a fantastic way to get started. Yeah. Next option, we're going to do a value add, maybe something like an in-law suite.
Yeah, something like an in-law suite, duplex conversions, anything like that where you can go in and majorly add value through your time living in the property. The reason why in-law suites are great to purchase for something like this is because they tend to sell for less than what would be like a legal duplex.
Absolutely.
So you can go in, you can get a more favorable price. If you do the conversion on your own, you're going to realize that equity return. And again, you're going to live for cheap. Super similar to the house hack model with just, renting out your rooms to your buddies. Yep. You're going to live for cheap. You're going to add value. That's going to propel you into that next step.
Big value add, if you can scoop up a property that's set up for an in-law suite already, but not a legal duplex, is going through the process to convert it into a legal duplex before you refinance or before you sell the home. Huge value add, and there's a lot of properties that you can get that are going to have 2 people living in it, 2 tenants in it, but it's a legal in-law suite. So what can you do with them, Matt? You can get it vacant. Yeah. That means you're getting a property that's going to give you as much monthly cash flow that's not a legal duplex yet, but it's vacant, so you can set your own rent, or you can live in the smaller unit on the cheap, rent out the bigger unit, and then go through the process to legally duplex it. Great option. Third one is a legal duplex.
Yeah, just buying a turnkey legal duplex. Couple real positives for this. You know, you getting in there, it's hands off. You're gonna live for cheap right away because you can either rent out, you know, the bigger one or the smaller one. You can also use the other unit's income to help you qualify for the mortgage.
Absolutely.
Something that isn't considered a lot of the time when you're looking at your financing options, and kind of everything that you could do is utilizing the income from the property itself to help you qualify. Another added bonus, again, going back to our step 2 here, if you do the actual conversion, when you refinance it, you can then start using that income as well.
Yes, so we kind of put these in order from, let's say, least expensive to most expensive in our current marketplace, guys. A house hack, you can be getting, if you can't get a detached, freehold detached, no problem. Start taking a look at some semis. Semis don't work, take a look at the townhouses. We highly recommend focusing on a freehold property, most upside as well. Same with the in-law suites. It's kind of a mix between the house hack and the duplex conversions as well. And the most expensive, but also the cleanest and the least work typically, is going to be the legal duplex.
Yeah.
And the big thing with the legal duplex, guys, is if you're close to having enough purchasing power to purchase a legal duplex in a market like Waterloo Region, you can use the rental income like Matt mentioned to help your financing file to be able to afford a property like this. And that's why we love this. So real quick, we're just going to give you a quick and dirty on the price range for these types of homes so you can get a better idea on what these would actually cost you if you're going to go and start shopping and purchase these ones real quick.
Yeah.
House hack, detached home, depending on the area, depending on the lot and the condition.
We've seen this, you know, anywhere between, you know, 700,000 to 800,000.
700, 800K.
Yeah.
Right? In-law suite, if it's not a legal duplex, it's going to be cheaper than, or if it's just an in-law, not a legal duplex, going to be cheaper than the legal ones.
Yep. You're gonna per anywhere 800 to 900K, typically speaking.
Yep.
You know, your legal duplexes are ranging anywhere between, you know, 900K to about 1.1 million, somewhere in that range.
Yeah, absolutely. And on that note, for the legal duplex guys, if you're going that route as a first-time buyer and you're going to be living in one of the units, you can utilize that to get vacant possession of the unit that you want to live in, and you can use that as an advantage against other investors who aren't able to purchase that. So ask us about other creative techniques we're using to help our clients get into properties like this. Awesome, guys. So figuring out how to purchase your first property, financing is a big hurdle to go over. Again, reach out to us if you have questions or concerns on how to get creative with that or how to get the first deal done. The first one is the hardest, but it is the most valuable, and it will kickstart your investing career. So first deal, you've either done a house hack, you got an in-law suite property that maybe you've converted into a legal duplex, or you jumped right into a legal duplex. That's awesome. Best case scenario, to get into the second property, Matt, we either refinance. Yeah. That's best case scenario.
Yep.
But if you can't afford to do that and you want to move up into something bigger that's a better investment, end up having to sell the property.
Yeah, so if you know you've done a house hack or a major value add or something like that, you can kind of use it as a stepping stone to jump into your next one, pull your gains, stick into the next one, and then kind of grow from there.
Absolutely.
Or, you know, best case in our opinion, you look to refinance one of these ones, you take that money out, you keep the property, and then you go in and you buy option 2 that we're going to talk about here.
Value is in the holds, baby. Value is in the holds, and we love holding as much real estate as we can. Something important to note as well is depending on these types of projects and depending on really what you've done with them, you know, it's very realistic that you can pull out anywhere from 100 to 250K from a project like this. If you've seen our previous videos about real estate, even recently here in Waterloo Region, that is a realistic amount of equity pullout for projects just like this. If you have any questions, check out the previous numbers on the videos. But for these types, this is your second property. You've done one of these already, you're an awesome little investor, you're getting started, you got some equity, we're gonna bump that into probably one of 2 or 3 different options.
Yeah.
Option number 1, duplex conversion.
Yeah, duplex conversion, another great option. Because you're forcing appreciation right away, this is gonna be a great option to help propel you into that third that we'll get to.
We like this one too, is because it typically is gonna offer the best equity bump as well, because you're adding a ton of value. You're taking a single family home, you're converting into a legal cash flow positive duplex. Bonus, especially if you're going to live in this or any of the other ones, you don't necessarily need to bring 20% down. Guys, you can purchase a property to duplex convert, you know what, 750 to 900K in Waterloo Region, depending on, right? 5% down. You should be able to get that from the equity pullout from this first project.
Yeah, and with the rest of that money, you can use it for the renovations to actually complete the conversion.
But say you're not a reno guy, you can't be bothered, you want to keep it a little more clean, more hands off, we jump right into another legal duplex, right? And can we still utilize that 5% down?
Yeah, absolutely. If it's your primary residence, guys, you can utilize 5% down. So you can literally you were living here, you're going to refinance that, you're going to live here now, 5% down.
Awesome. Now say you're still comfortable living in this property or you're living somewhere else, and you want to jump into something a little bit bigger. What are we going to go to?
Small multi. So 3, 4 units, and again, if you've seen our previous videos, great investments.
Can we use the 5% down even if we move into one of these?
If you move into it, yes.
So you could move into a 3 to 5 unit property, 5% down because you're going to go live in one of the units.
Yeah.
Fantastic. Now, for people that don't want to go through the duplex conversion process, hop into another legal duplex. You can utilize the income from that to help with your mortgage financing as well. Same with the 3 to 5 unit property. You can utilize the income from this type of property to help you with your mortgage file to qualify for the financing. And why do we like the 3 to 5 unit properties, Matt?
Res A financing.
The juicy Res A financing.
Res A financing. So we're still sub 2, 30-year AMs.
You gotta love it. You gotta love it. And if you haven't checked out those yet, previous video we showed you how to burr a triplex and a fourplex in downtown Kitchener. You gotta check it out. So now let's jump into the third property and how those numbers look. So you've purchased the first property, house hack, in-law suite, duplex conversion. Second one, Matt, we're looking at duplex conversions, legal duplexes, 3 to 5 units. Juicy Res A financing still. For the third one, this is assuming you've probably already taken out some equity on the first one to go to the second one, and now you got an equity bump in that second one, as well as some additional savings because these are going to be cash flow positive properties, and since they're already rented, you can use the rental income from this to finance the third one. We highly recommend you take a good look at a multi-unit burr.
Yeah, always a great option, guys. We love the multi-unit burrs.
Right? This is a great option for somebody that's looking to be a little bit more aggressive and jump into another project or another larger property right afterwards. Now, if you're not necessarily looking to be as aggressive, you're not interested in running a project like that, then what else can we do?
You can get another turnkey duplex. You can get another turnkey multi. There's lots of options. Once you've already got the solid foundation that we've talked about, there's tons of options down here, guys.
Yeah, depending on your market, depending on what opportunities are available, another turnkey duplex will be cash flow positive, fairly hands-off. You could even go into another duplex conversion if you find another really good purchase price for a property like that, or you can just park capital in a multi-unit that's already being rented out. Just like the fourplex in downtown Kitchener in the previous video we released, cash flow positive, purchase it as is. Now in these types of properties, it's a little bit trickier to keep using that 5% down if you're not going to be moving into them. So just be wary of that, but you have more properties giving you positive cash flow, and all of these properties are generating rental income that you can use for your mortgage financing.
Again, guys, creative financing, especially on the burr side of things. You can get into Alt A lending, B lending, all of that stuff to get you over that hump to increase the rent where you can stick it back in that A financing based on your new market rents.
Absolutely. And the reason that we really wanted to break this down was in Waterloo Region, we've done this. This is how,
and there's opportunities out here all of the time. Like this is stuff we see all of the time, and then there's still opportunities out here, guys. And again, like on the MLS, there are opportunities out there like that.
Absolutely. And I think it's really powerful to better understand if you're a buyer with that investor mindset, that first one's going to be the most complicated. It's going to be the biggest learning curve, but it will open up number 2 and property number 3 very, very quickly. So the first one's tough, but scaling is really, really where the magic happens, and it's much more possible than a lot of you may think. Now the net result, if you followed kind of this type of trajectory, let's say, your net result is, your probably net worth is probably over $1 million if you've gone through this. You're cash flowing a couple $1,000 a month, and you've probably updated or renovated at least 1 or 2 of the properties you've already, purchased and lived in, and you have equity in these properties. These not like your leverage, way over leveraged. You got equity in them. You're making a few $1,000 a month, and you've increased your net worth to about $1 million or a little bit more. It's a fantastic way to start accelerating your growth and your wealth. So we love this method if you haven't owned any properties at all. Now, for people that do own property, we're going to show you, if you already have one property, primary residence maybe, how you're going to leverage that into starting and growing a real estate portfolio right here in Waterloo Region. Okay guys, so this section of the video is for the scenario for those of you that already have a primary residence. So if you've purchased a property, whether it's in Waterloo Region or pretty much anywhere in Southern Ontario in the last 3 to 5 years, or even 1 to 5 years, you're probably got anywhere from $150,000 to $400,000 in equity in the property. Oh yeah. Look at you, just for buying a home around $700K, you're worth about $1 million now, you got $300K to work with, right? So best thing and one of the most common ways is either a HELOC or a refi.
Yeah, so if you've, for example, if you purchased your home for $700K and your home is now worth $1 million, you can access 80% of that equity via a refinance, via a HELOC. Basically can open up, again, if you've got $300K in equity, $240,000 that you can take and stick into a secondary pro.
And that gives you enough equity to go out and just purchase with 20% down something like a duplex conversion.
Yeah, and again, guys, we love the duplex conversions. We've done a lot of them. The reason that we like them is it's good cash flow. They're fairly easy to manage with just 2 units. And you get that equity bump, that sweet equity bump that, again, we can continue to just repeat and repeat and repeat.
We like the duplex conversions if you want to take on a project, if you're really interested in the construction, the renovation side, or you just want to be more aggressive. You want to get your capital back to go deploy on something else. Duplex conversion, highly recommend. Next option, somebody that's not interested in those types of things, cash flow positive duplex. You can use the rental income for the financing.
Yeah, and you really can't go wrong. Super safe bet, just going with a duplex.
Yep.
Again, you buy something turnkey, the cash flows. You've got enough equity in your primary residence. You just literally just stick into a duplex.
Yep.
The cash flows just like that.
And then the other option would be to jump right into a larger multi-unit. 3 to 5 units, again, resi financing.
Yeah, the reason that we touch again is 3 to 5 is mainly because of that resi financing.
Yep.
Once you hit a wall with that, that's a later video.
Yep.
We'll get into that, but really, the resi financing, you want to take advantage of it while you can. 3 to 5 units, a great way to get into some smaller multi-units.
And depending on where in the city, how nice, the income, the purchase price, you would likely be able to purchase a 3 to 5 unit property with close to $240K down, depending. Right? So it's still an option if you're just refinancing your primary residence straight up. You will likely have the financing juice with the income from this type of property to do so.
Yep.
Real quick though, duplex conversions, Matt, we're looking those, what, 750 to 950?
Somewhere in that range. I know it's a big range, but the reality is our market can be sporadic and there's a ton of different styles of properties out there. So it is what it is.
Net result for that though is you're pretty much taking out the majority of your equity. You got your cash flow in a couple $100 a month.
Yeah, exactly. A duplex conversion these days, you're typically in at the end of the day after refinance for about $100K.
Yeah.
So if you got $240K or $200K, you're only using up half of your funds for your second property. Absolutely. And that's going to help you later.
Yep. And then same with a turnkey duplex, purchasing those anywhere from high 9s to 1.1.
Yep.
Cash flow positive, a few $100 a month.
Yep.
A little bit hands off. You're waiting for the market. You're waiting for tenant turnover to increase your rents before you can refi and get capital out. Yep. But again, less work, safe bet for somebody who doesn't want to be as aggressive. Multi-units, they range a lot more in price.
Yeah, and they can, again, if you've looked at our previous stuff, you can see how those can look. You can get one that's turnkey, just like a regular duplex that you're gonna just put your money into. It's gonna cash flow. You're gonna build up equity via paying down the debt,
Yep.
market appreciation in your cash flow, or you can get into one that needs work. You can turn over units, add value that way, refinance, and on you go.
Absolutely. So now we're going to talk about in the next spot what we're going to do for our third property. You keep the primary residence, you got one of these under your belt, you're going to add your second investment property. Let's get into it. So your second property, which is your first investment property, good job, good for you. We're looking at duplex conversions, turnkey duplex, or a multi-unit, 3 to 5 units, resi financing, equity bump available in all these to be able to go and roll into the third property. Third property, Matt, we love the multi-unit burrs.
Yeah.
We can't talk about it enough.
No, we'll go on and on and on about multi-unit bursts. Just a great return, very good long-term potential as well. Yep. And honestly, you got your prime residence, you got your first investment property. Take the step. It's a small leap to get into a multi-unit over a duplex. Yep. You can afford to do it. There's just better long-term value and better cash flow long-term.
More options for the multi-unit burrs and the 3 to 5 unit properties. Look, just like the fourplex in downtown Kitchener we bought it as is without the expectation, just turning over units naturally. Yeah. And we thought it was a good opportunity. So you could definitely go for something like this. Make sure you get it at a fair purchase price. Let the rents, carry the property for you, make you a few $100 a month. As they turn over, you're going to do a slower version of the burr. We think there is tremendous opportunity for multi-units that you can still pick up with resi financing in Waterloo Region. So we can't talk about it enough. If you want more information on that, go check out the other video that we just released on the triplex and the fourplex burrs we did in downtown Kitchener. But this is going to be a great fit for your third property. But the reality is you could also just do the duplex or the duplex conversion.
You could, if you love this, you can keep doing it. There's nothing wrong with that. Yep. We just look at, when you're looking at multi-unit burrs, price range as well. Yep. You're $1 million to like 1.5, let's say, but your duplex is going to be around $1 million. So price per door, price per unit, significantly less once you get into the multi-units. Just some really good value there.
And it's honestly a logical step because you're using the cash flow from the other unit you already have, and you're using the cash flow from the property you're buying to support the financing and again, that juicy Res A financing. So after you've purchased this third property, you got your primary residence, you got your second property, you've leveraged those two into your third property. Awesome. You could just keep these as is, keep working your job, and if you're smart, you can retire pretty comfortably 5, 10, 15 years, and you're a multi-millionaire. Good for you. But if you want to take it to the next level, you're getting into more multi-units, you potentially getting into commercial, getting into construction projects, and those are the things that us and our team are really doing now. So if you're curious to take it beyond this step, if you're already there, or if you see this and you're saying, Zack, Matt, yes, this is the stuff we need to be doing, start with the end in mind. Contact us with the information, link in the description, and get in touch. A big thing we do with a lot of our clients, and especially our investors, is think about the long-term strategy and the long-term goals to make sure that we're mapping out exactly how to do this. These examples, we're putting them up pretty rough right now. The math checks out right here in Waterloo Region. If you have a primary residence, the duplexes, conversions, multi-units, and the BRRRRs still make sense with the equity you likely already have in your home. So come and talk to us, figure out how you can start building your real estate portfolio today.
Thanks so much for watching, guys.
Really appreciate you guys checking out the video. Thanks for checking in on the Canadian Real Estate channel. Again, my name is Zack Brittain and my partner Matt Phipps. We are here in Waterloo Region. If you like the video, give us a like, hit the subscribe button, and drop a comment on the stuff that you would like to see for real estate right here in Waterloo Region. If you want to get in touch or you want to get in our investor hot list, head to the link in the description. There's a link on our website. Select the investor tab. Say, Matt, Zack, I want those sweet, sweet hot list deals. Tell me how to make some money in real estate in Waterloo Region. We'll follow up and make sure that you get the listings that we think offer great value right here in Waterloo Region. Until then, we'll see you next time.
Juicy Res A fine.
That juicy Res A. Yeah.